All right, so welcome to another episode. Today we're going to check out Lending Club, and I'm going to take a look at this stock and chart in detail for you. Keep in mind, it's not a recommendation, just my own personal opinion. And if you want to grab my opinion, you can check out our Discord channel, and that way you get notified as I release new videos, or you can just request one on a stock or ticker that you like. Anyways, things are in the description and a link below if you want to see that. All right, let's check out Lending Club here as we go in and take a look. They're basically a loan company, right? That's how they make a bunch of their money. So as you take a look at this, they recently had their earnings released. Now, there's not a lot of news on that kind of thing, but instead, when you look at this stock chart and just look at the behavior, the stock has been going down quite a bit since recently. I mean, before that, it's been going up, but now we've been getting a lot of pullback and action, and I'm going to go ahead and check this out for you in more detail on the charts. So, okay, let's zoom out for quite a bit. And as we check this out, what you want to see is, okay, this stock kind of opened up here 2014, 2015, and overall the trend has been lower. Now, one thing to watch out for is always these stock splits. So if you look for a stock split, this sometimes can be an area of concern. So for every one share you have, you get 5. So what they're doing is a 1-for-5 stock split. They're trying to kind of pump up the stock price a little bit, make it more attractive for other people to kind of hold it. So this is a little bit of trouble, and all throughout this time, you'll notice the selling pressure was picking up, and that's where there was a lot of this huge selling pressure, and that's not a good thing to see. So you see this downward trend here, that was a problem. Now, you did see a little bit of a break on that as we got into kind of 2020, 2021. I guess probably people needed more personal loans because there's a lot of people lost their jobs. So the pop started to happen right around this area, around that $10 mark, and $10 is a really sweet spot for a lot of stocks anyway. So once they can break through that, that's usually a nice view and nice look. So as we look at this, just check out that $10 level. You can see, like, once we break that, that usually is a good sign. However, here's where we got a little bit extended. So the stock got into that $5 range. Look at this 50. We rejected right at 50, which is kind of this zone where the same spot that last bar kind of touched. And we retraced about halfway there, and that's a bit of a problem. So now, if we are getting a turnaround, which you don't know yet, you don't really know, if we are getting a turnaround, what you'd like to see is go this, like this is heading higher into the upside. We'd like to see a pullback to about a halfway mark, and then we'd like to see it bounce. And the reason for that is it shakes out a lot of the weak hands. You'll probably see it kind of come down to that split level or so. And if you want to do some Fibonacci analysis into it, what you can do is take a look at the fibs, go from this lower levels right up to the highs, and you can see, look, we've already broken those fib levels. So that's why I say you might get into some of these other areas right here, because with these cheaper stocks, they do behave a little different. You can see we did have this rounding bottom around 5. The stock just got a little too cheap. But now at this point, where is the bottom? You're going to start bottom fishing, and that's what's going on here with this stock. Is just you got into this upside move, you had a huge breakdown right here, and we're trying to find that next bottom, and I think it's going to come down to where these splits were, somewhere around this area. And that's probably where you'll find a little bit of a base and nibble. So as for looking at this on the shorter term duration, and we're looking at, let's go to 2-day real quick. You'll see right here, we had this upward move. This is a break, and that is not a good sign. So that's a bit of a problem. I wouldn't say the stock is crashing, but where would I start looking to nibble? Well, if you're trying to nibble on this stock, you want to break it apart a couple months, okay? Right now, look, this 1-day, 2-day up move, it's not going to be a good trend, right? You got to look at 3 to 6 weeks. That's what a trend does, like, right? That's a little trend. That's a little trend. You're looking at little moves to create a trend, not just 1 day. So 1 day green does not mean a buy signal. Instead, what you're looking for is, hey, can I get a little bit of a turnaround similar to what you saw at the $5 mark right here? And this allocation actually was July, August, September, October. So you're allocating across 4 months. So here, the same thing. If you can get a little bit of 3 to 4 month action kind of this way, and it might be sideways between the 20 and 15, for example. If you can get some allocation there to move sideways and you can allocate a little bit, that's where you might see a little bit of a better pop. Okay, but for now, we did gap down. That doesn't look good, doesn't look healthy, and some of these stocks take time to digest this earnings move. You had a previous gap here, so a lot of these open spots are just trouble. So watch out for stocks like this where you got those levels, and you're trying to watch this $10 level. You've got some support right there. That could be a good sweet spot as well if we keep continuing down for a possible bounce. And that's kind of an opportunity where, hey, if you're trying to nibble, buy on the dip. Remember, you got this upside move, possible pullback, and then if you're looking for higher prices, you're looking for it to bounce there and then maybe head higher. But I would start looking to add maybe at around 10 if I was looking to add, not beforehand, because right now I think it's still stretched and it could pull back even further. There's just too much weakness in that stock. And with this clear break right now, with the market being weak as well, these pullbacks can last a while, and these splits right here also can be a problematic approach. So try and nibble, like, you know, if you're trying to get 100 shares, you could start nibbling like 10 shares, then wait a couple weeks, then maybe get another 10, then wait another couple weeks. If it looks good, maybe get 20 and start averaging into that position, because you're really waiting for a rounding part like this, and these take about 4 months. I wouldn't jump in all at once. If there's no clear-cut support for a stock like this right now, the nibbling has to be done very, very lightly. So if you're kind of trying to nibble an acorn, got to be done very lightly, because you need to create a base and a core position pricing area before that stock can take off, right? This is like a spring building, and then it explodes. And that's what happens, okay? So be patient on that and work the trade rather than trying to get in all at once. Anyways, thanks for joining me. If you want to check out my options channel, want to learn a little more about options, check out the Trader's Fly channel, and we'll see you there. Thanks.